How's it going, everybody? Good to see you. Good to be back. Ed Ponsi here, your FX educator, here on behalf of FX Street once again. Just pulling up some charts and taking a peek here as we begin. Right, another day here on FX Street. We've got two sessions for you, two 30-minute sessions. So if you do have any questions, be it about technical analysis, fundamental analysis, risk management, anything along those lines whatsoever, please feel free to ask away, and I'm more than happy to try to answer any of those questions for you. As we begin, right, getting ready to get started here. Futures are down in the U.S., right, and stock futures are down. European stocks were down. Spain's central government says it's going to assume control of Catalonia, and it appears that that's affecting the futures here in the U.S. and it affects global stocks. Right. So anyway, that's all happening. Of course, that affects our friends at FX Street. So good luck to everybody over there. And so we'll take a look at the futures first and foremost. Then we'll work our way with the futures. And there you see a big red futures in the U.S. That engulfs a lot of these green candles. But don't be surprised, and it's been a heck of a run, right? But don't be surprised if the futures bounce back as we continue on, right? Because that's been the way that things go. Now, when stocks go down, people are scared, right? So what goes up? Let's take a look at the dollar index. Usually the dollar goes up when people are scared, but not today, right? The dollar's not having it today. The dollar's down a little bit today. You would think the euro would be lower, but the euro is actually higher on this. So the euro actually jumping up on this news. You have this head and shoulders forming on the euro potentially here. Euro heading back up toward resistance. Now, we hit resistance up here at 118.50. It actually topped out a little bit higher than 118.50. I'd have to say that euro actually topped out somewhere around 118.70. Let's call it 118.75. And we're heading back up there, up that direction again. We appear to be heading back up that direction again, but this could still turn out to be a head and shoulders, make no mistake about it. It might just need a little bit more time but we're still bouncing around inside that potential right shoulder there on what seems to be could be a head and shoulders. We definitely have a left shoulder. We definitely have a head. We have a big green candle today. So it looks like Spain's move here has actually helped, is actually helping. The euro is part of it. The other part of it could have to do with could have something to do with the Brexit issue. Corbyn got involved, the Labour leader, and they're going to use this for their political purposes too, and that could also work out well for them. So Corbyn makes a tactical Brexit move in Brussels, and got his Brexit pitch in before Theresa May. I don't know why we have opposing parties both making propositions. All right, but Corbyn got a standing ovation in Brussels, so apparently, obviously, the Europeans would rather see him in charge. And so I guess they liked what he had to say. Anyway, I'm sure it was much more conciliatory than what May has been putting out there. At any rate, and that could be helping the euro as well. And the pound is, on the other hand, down a little bit, but very volatile today. We had a long wick, but it bounced back. Okay, so let's get to the charts and see what's happening here, and if there's anything tradable from all this. Let's pull up the yen pairs. We have not taken a look at these recently. We'll start with Aussie. Richard, who's in the UK, says the unions fund the labor participation and they are beginning to panic about jobs. Corbyn's a big Eurocentric. There you go. So our man in the UK checking in, filling us in on the details there. We just don't get those details here in the US. So thanks for that, Richard. Moving away from all that for a moment, let's talk about the. So it's interesting. It's never. It's endlessly fascinating, right? As we watch history unfold in the UK. Watching this chart unfold here. This is a rather large version of what people call a wedge. And it's considered bearish, believe it or not. And, you know, you're saying, well, Ed, this is higher highs and higher lows. How could it be bearish? It's bearish. Again, I'm going to tell you exactly what the popular version of technical analysis is on this. First and foremost, higher lows and higher highs, but the higher highs can't keep up with the higher lows, which is telling us that it's running out of steam. There's no real enthusiasm here. Now, that's called a wedge, and it's considered bearish. I don't think it's all that bearish. Okay, I'll tell you what else I see in here. But there are times when I'm going to disagree with traditional technical analysis. One of them is the hanging man pattern. This is another one, the wedge pattern. Just because the higher highs are not accelerating at the same pace as the higher lows doesn't necessarily mean, in my opinion, that this is a bearish chart. I'll tell you something else that I see here that I think is potentially pretty bullish. I see an inverted head and shoulders. And again, traditionally, we look at this as a reversal pattern. So traditionally, we would be looking for this at the bottom down here. We would not be looking for this after a rally. But a head and shoulders, not not everyone is aware of this. The head and shoulders is also a continuation pattern. And in this case, that's exactly what this appears to be. To me, is a continuation pattern. We have a pretty strong move up here and a consolidation into an inverse head and shoulders, which is bullish. Right? And then, right, like if this does break out, it looks like 90 is the approximate breakout point, although maybe a little bit higher than perhaps 90.5, just roughly. This could go considerably higher. Now, the way we use these patterns is we measure them. And this is traditional. Again, this is traditional. And I always look at traditional, and then I'm going to explain why it's traditional and the shortcomings of traditional technical analysis. Traditional technical analysis says you measure from here, which is about 81, up to the neckline. And I'm going to take, because this neckline is slanted, I'm conservative with the way I measure things. I want to, I don't want to measure to the highest point of that neckline, which would be measuring from 81.5 to 91.5. That would make the math really easy. But let's go with the average of the neckline. The average of the neckline is right in the middle of the neckline. That's right about here. And that's about 89. So let's say 81.5 to 89. Okay. And how far is that? That is 750 pips. Right, 750. Right. That's what we would call the height of the pattern from the head to the neckline. Right, from the head to the neckline. Now, understand that these measuring techniques were created before personal computers were in widespread use. So they're not very scientific, and they should be just used as a rule of thumb. We should probably also incorporate other forms of analysis into this, and we will. But simply speaking, we would add 750 as our target to the 89, and that would give us 96.50 as the target using the measuring technique. That's the target for this pattern. Okay. That's, again, it's an inverse head and shoulders, and it's a continuation head and shoulders. The height of the pattern is 750 pips, so your ultimate goal is 750 pips. Now, what are we not taking into account here? We're not taking into account different levels of resistance, like here, right? And here. Look at that, right at 92, a big round number. right? So we should be using these other levels, 92 and 95. So 96.50 should be your farthest potential target, is the way that I interpret this. It doesn't have to be a target. It should be your farthest potential target. But there's definitely resistance back here at 92. Do you see that there used to be something that appears to be a head and shoulders here? Left, head, right, and then bombs away. From here, a big head and shoulders pattern. And this appears to be the height of the right shoulder. Appears to be approximately 92. I would have a target just under 92. We've seen so many times, and if you've traded Forex for any length of time, you've seen this too, that the price will reach a round number and reverse. And it happens frequently. So I will use this as one of my targets, this 92, but in actuality I'll make it something like 91.95. Okay. And that, I'll mark it in blue. I like to mark my targets in blue. Now let's say there was nothing up here at all. If there was nothing up here at all, would I use 96.50? No, I wouldn't use exactly 96.50 because I'm assuming that other traders who understand how to use these patterns would probably use the same targets. So instead of 96.50, I would lower that 96.50 to an amount equal approximately 10% of 750. I'd lower it by 75. In other words, I'd be willing to accept 90% of my goal. Instead of 96.50, right? I'd lower that by 75, and that would leave me with 95.75. So 95.75 becomes a potential target. But wait. But wait, here's the thing. Let me make these lines blue. $95.75 becomes the potential target, but I have this resistance just below. This says 95.19.1. Call it 95.20. So 95.17 is a potential target, but 95.20 is also a potential target because of this line right here, of this sort of right shoulder from the old head and shoulders. I'm sorry, this is the right shoulder, 91.95. This is the head of the old head and shoulders, and that is 95.20. and that's a potential target. One thing I really don't want to do, I really don't want to have two targets that are right on top of each other like this. So I'm probably not going to use both of those, just so that we understand it. Probably not going to use both of those targets. Okay, I'll probably keep the lower one because it's based on actual resistance and because it's a little bit easier to hit. I mean, it's nice and far. They're both nice and far away. They're both hundreds of pips away, right? So wouldn't you feel silly if the price made it to 95.20, but that wasn't your target? Your target was 95.75 and it did not make it there? How silly would you feel? I'd feel terribly silly. So 95.20 will become one of my targets. It's based on something real, right? The head of that head and shoulders. There it is again, left, head, right. The right shoulder, sort of a double right shoulder. And then a sharp drop, which is exactly what is supposed to happen right after a head and shoulders, that sharp drop. So I have two targets here, 91.95 and 95.20. Let's try to zoom this. Now this is going to get tricky. One of our targets is going to be very close above that neckline. We don't know where the price is going to be when it gets above that neckline, and we don't know if the price is ever going to get above that neckline. Right now, that neckline is here, about 90.50, about 90.50. And the high over here is about 90.20. So even if that neckline continues to rise, if the price gets to 90.50, we could say it's hitting a new high. It's getting above this high and subsequently above all of these highs. So 90.50 can become our entry point. It's not, and that makes it green. Suddenly, looks like we have a trade setting up, right? Now, ultimately, our target is about 470 away. By the way, jobless claims just hit 222,000. Seems like a very low number. Just to peel away from this for a second. And the Philly Fed number comes out on the strong side here, 27.9. So two signs of economic strength right now. Very low number for jobless claims and a strong Philly Fed number. Just to keep you updated. So if our target is 470, the farthest our stop can be is 1/3 of that. 470 divided by 3.
It's about 156.6666.
So 150 stops is 156, she said, is the farthest we could go for our stop. That's very convenient because if I put my stop 156 away, that would put my stop just under 89. Again, I like to get underneath the round numbers. Sorry about that. Okay, so there we have it, right? We've got a 3-to-1 target. We've got our stop. That should be 88.94. Let me edit that down. 88.94. All right, and that means our stop is 156. That's exactly 1/3 of 470. Our target is 470. Our stop is 156, which is 1/3 of 470. We are going with the trend. We are using that pattern, which is an ascending. Let me just fix this up. Don't know how we've lost that. Okay, just a second. There it is. We're using that inverted head and shoulders pattern. So this is our setup for Aussie yen, right? We've got our inverted head and shoulders, sort of a continuation head and shoulders, not a reversal. Again, not everyone knows about this. But head and shoulders, both inverse and irregular head and shoulders, can be used as continuation patterns. That's exactly what we're doing here. Let's see. Here we go. We've got the whole setup, entry, stop, 2 targets. When we hit the first target, we'll move our stop to break even and aim for target number 2. And that, folks, is that. That's going to wrap up our first session. We got some strong economic data as the cherry on top there. Jobless claims 222,000. Quite low. And a strong Philly Fed number on top of that. So let's end on that note, and I'll see you back here in 30 minutes Until then, this has been Ed Ponsi, your FX educator, saying thank you for listening. I'll see you back here in 30. Thanks for listening.